Second here.
It's a great week, eh? Great week.
Yeah, definitely great week. Great market environment. It's definitely not lacking, and I definitely feel, I mean, just staying objective, right? If the markets want to go up, then we stay objective and go green light and continue to hold until we get a yellow light or red light. In which case, a red light means, don't try to trade too heavy. I found that to be really helpful for me at least. And it also helps you control like maybe over trading when it's a really bad environment. That's where you get hurt. So don't try to give me 1 second. There we go. Perfect. Uh, Good morning, folks. Shall we get started? This morning, my headset is getting a little old over here. I might have to get a new one. I've been using this one for man, I don't even know how many years. Oh, and I forgot my water. Oh my gosh. Okay. We'll get started in 30 seconds here. If you excuse me, I'm gonna grab the water from my kitchen real quick. I've got water, but I forgot. Give me just 10 seconds here, or 5 seconds. Hold on. Okay. All right. Good morning, folks. I'm back. Let's dive right into it. So let's see. Let's start at the top and start talking about the markets. Before that, I know some folks are joining right now. I am hosting a in-person event next week. It's been too long. It's been a whole year. But maybe I'll announce it later towards the end. But just a reminder, so far, let's see, I got 1 week from now. We got 77 folks RSVP, and it's going to be in Milpitas. So we're trying out a new place. If it works out, then all future events might just be there, and we could scale up a lot bigger. So that's going to be a lot more fun. Speaking of that, let's see. Before we get started right here, I'm looking for the chat box, so I can hear you guys. There we go. And then also some tools. Make sure I got it open. I definitely love the Guru focus here today. But let's dive right into it. So starting from the top, all around, markets have been really fantastic. If I pull up the system, hey, good morning, Bernard. Good morning, good morning. Looking at the S&P 500 here, we continue to go higher. So again, every week, right? Every week is 5 candles, 1, 2, 3, 4, 5. So we were basically around 580 last week, and now we progressed to 584.5. So markets are still doing well, right? If you have the view of like, oh, it's too high, it looks kind of scary, but what can we do? Institutions are coming in and they're bringing the money, so we want to follow. You were right on the mark for October, very positive. Hey, thank you, Bernard. I mean, I'm just following the system and properly interpreting it, and then seeing where, if I'm wrong or right. But so far, system says, things are still good, right? And we're going to double click on that today. I'm going to pull up some of the expensive, $8,000 indicator over here and show you what the markets are seeing. What I have right here is FNGU, right? Evan says, okay, I'm here. uh, I don't know. I don't know if that's for me or maybe for someone else, but okay, cool. FNGU right here. The reason why I pulled this one up, right, is because, you see like the green dots right here. Those are basically like long signals. But what I had before this was Meta plus Microsoft plus, oh, let me see, plus Apple plus Amazon plus Nvidia plus Tesla plus Google, right? So that's the fangs, right? And it was interesting because I had that one up prior. And the funny thing is that the system says we got a red right here, right? Not necessarily a sell in my book, but it's just like a slowdown to a red level right there. Um, so what I did was I pulled up FNGU, which is also a proxy, and that one's giving a long signal. So you see like how sometimes like you want to double check things, and maybe there was one of the stocks within the fangs or whichever that didn't perform well, which caused that the system to turn around a little bit. But I don't think that's a red flag yet. I still see the markets are rallying to new highs, so things are still pretty good. I think if anything, we're setting up to be a pretty bullish month right now. We got about what next week, 2 weeks left. We still got 2 weeks left in this month. for the monthly candle to print. But if we zoom out to the SPY S&P 500 monthly right here, this is what it looks like, right? We're just marching the new highs right there. Speaking of new highs, I think one of the highlight plays of this week, or something that we've been watching for a while now, is Netflix, right? It's interesting because I mean, it was tough. It was tough going into it because last week, one, two, three, four, five, right? We actually sold down for the majority of the week, and then earnings came out, and this thing popped up all-time highs. So if you zoom into the monthly now, right? Technically, officially, we are over that line right there, right? We're over that 700, and officially, Netflix is now at all-time highs, right? Is that buy or sell? Again, not investment advice in here, folks. Is that buy or sell? That's a screaming buy, because you got to think about it, right? Like, which institution came in on earnings with such huge volume and dragged the price up? They're also taking risks. So if you're thinking like, okay, hold on for a second, if we measure it, right? There was 16 million volume at around 750. So the question is, what is seven? Let me see. That was 16 million times 750. What is that? 16 million times 750. This is how much dollars came in on just that one day right there. And that was 12 billion. So 12 billion dollars, right? So for you to say like, oh, I'm risking like 50K, 100K, and it's against me, like that's very like small player talk, right? Because like I mean, I just told you right here, like that one day alone, there's 12 billion shares that traded on the plus side. So 12 billion dollars came into Netflix, right? You think that 12 billion dollars is scared money? I don't think so. I think that's some big money right there. Bernard says invest in Apple. I swear it's impossible to go a year without spending $1,000 on their products. Yeah, I mean Apple is actually also gearing up for earnings, and it's also looking pretty good. So I'm actually bullish on Apple now. I mean, I actually, if we were talking about some added trades this week, I added some more weeklies on Apple. So I like Apple. Earnings are coming up as well. I mean, especially, I mean, we are in earnings season now. So next week we also got like Tesla earnings and all that. So yeah, things are looking really bullish right now, at least for the month so far, right? Doesn't matter. Again, like don't take it to heart where it's like, hey, you said it was bullish and then it's not bullish, but like 30 days later or whatever. But what we're doing is just objectively analyzing like where things are going and then sorry, getting messages over here where things are going, and then just follow the rhythm of it. So if the markets turn bearish, then I turn bearish. But for now, the markets are bullish, so I definitely feel bullish. Uh, let's look at let's continue to look at the S&P 500 or all around. So we looked at the S&P 500, so let's look at the Nasdaq. All right, we're just doing our initial calibration for the first 10-15 minutes here before we actually dive into like the list of stocks. Speaking of the list of stocks, let me pull this over here. There you go, and move this here. Perfect. So this is QQQ here, right? So what do you guys see on NASDAQ right here, right? We're just practicing, of course, with my indicators and overlays and all that stuff. But, what do we see right here? Did we progress? I mean, last week, right? 5 candles, 1, 2, 3, 4, 5. Last week we were over here. So we sold down a little bit, right, in terms of weekly candle. So we pulled the weekly candle, right? We kind of have this doji. Now, does that mean reversal? No, I don't think so. I think things are still looking pretty good, right? I think, as long as we maintain above this automated trend line right here, we found support there, which is like nice confirmation. I still think this is going to trend higher because why? Well, I look at the Dow Jones Industrial Average and the other like Russell 2000, they're also moving up higher. So majority of the indices, and Nasdaq's lagging, majority of the indices are moving higher. I'll show you the other two. So check out Dow Jones over here. Dow Jones also moving into all-time highs. This is fantastic right here. Look at that. So this one definitely performed this week. So I zoomed out to the monthly. This is the monthly chart right there. Let's go back to the daily, right? So this is what it looks like. Wow, just amazing, right? 1, 2, 3, 4, 5. We were over here last week, right? We basically went 428 to 432. This is meaningful progress in my opinion. So yeah, markets are looking pretty good, guys. That's the Dow Jones. Then we're gonna look at the last one, Russell 2000 over here, IWM. Again, just feeling out, calibrating to the USA markets and what we have right here. Last week in the weekly report, I noted that this was a double top right here, right? Double top meaning you got one resistance point right there, one resistance point right there. We cleared that double top. Now that becomes support. So we know that this area right here is now active support, right? Because that was a prior resistance, it cleared it, resistance becomes support and vice versa. So there's support right here, and this is meaningful progress. This is recent highs. It's not all-time highs, but it's hitting recent highs. So all-time highs would be above this candle line right here, which is the 244.5. Above that, that'd be all-time highs. Now, on top of this week, we also, folks are also talking a lot about crypto. So let's swing over to Bitcoin real quick and analyze what's going on in this market because, Bitcoin might be a runner, right? Bernard says the 5-year graphs are far more meaningful, shows the market is absolutely the best place to invest. Yeah, pretty much. I mean, even when we go, I mean, I don't know if you want to look at a 5-year on Bitcoin over here, but I mean, the Bitcoin 5 year is fantastic, right? Even if we go, well, five, yeah, I mean, even then, right? You go through like a period right here, but Bitcoin 5 year from 9,000 to 68,000, right? I mean, this vehicle is expected to go a lot, much higher. So we'll have to we'll have to see about that. So that's Bitcoin right there. Let's go back to the daily, do a little bit of analysis right here. Dow, Nasdaq, S&P, Bernard says, yeah, they all look good. I mean, essentially, what they are indices that the institutions have engineered, and they'll keep rotating the best stocks into the S&P 500 and stuff like that. So in a way, it almost sounds like you're always going to be engineering shares that go up, higher and higher and higher, because it's always going to be I guess like rebasket it, or what's the word, re recalibrate it to the best of the markets. So it's almost like it just keeps going up. Shell game. I'm trying to think of like what you mean by shell game. This is the weekly on Bitcoin. We're going to zoom into the daily, right? Crypto is heating up, and what I saw this week was MSTR MicroStrategy was actually leading the way. So look at this hugging action that we see right here on that line right there. Isn't that beautiful? I don't know if you guys see it, but that's hugging action right there. It's not perfect, obviously. It's never going to be perfect. You're not going to get perfect in this game. If you're seeking perfection, then you're going to have a hard time finding entries and exits, because entries and exits are never perfect. Ivan says, "Good morning, Kay." Hey, good morning to you too. The market looks very good, he says. I was wondering if Trump wins, we have a sell-off. Druckenmiller said that the markets are pricing in a Trump win. Let's wait until that happens. Like I get this is like the timeless questions of many folks, like, hey Kay, like, if politics does this, does that, does market go up or down? It's the same question over and over, and at this point I'm like, let's just pay attention to key support and resistance, and let's say before the news or after the news, if we clear, we break support and resistance, then we know our next data point. But it's really, I mean, I could tell you my thoughts now, but in the end, I don't know if I'll be right or wrong. I think it's better just to analyze like the markets in real time. So we're always in here analyzing every week actual, active capital deployment. Like, like I just showed you Netflix, right? Netflix is like on last Friday or last earnings, 12 billion, the amount 12 billion came into the market. So it's like, I mean, that speaks for itself already, right? Like if we look at it right here, give it 1 second. So Friday earnings, there we go. So Friday earnings right here, right? Huge gap up. This one day alone was $12 billion, right? So this is after the fact, and we have communication across the global markets, right? Like think about the world. Everyone in the world is now seeing the same thing that we're all seeing. Like that's what I'm saying. Monkey see, monkey do. Like it doesn't make sense to speculate something ahead when we're such a small fish in the game. Now, if we're a big player, then I mean, with that much money, I'm assuming you're professional, then yeah, it makes a lot of sense to build a position because you have to build a position. But for us smaller players, I think it's way more safe to wait for confirmation. So now that Netflix cat's out of bag, it's to its all-time highs, $12 billion I've just deployed. Are you going to say it's too high? Because if you are, then we got a problem, right? Because the $12 billion player just got in. It's probably not just one player; it's like a group of players, but that group of player decided to buy aggressively that day, right? We could zoom into the 5 minutes, see all the action of how it happened, right? It started like actually, my bad. So earnings, it happened the day before. It was on Thursday, right? So Thursday after hours, it gaps up, right? And then right here, this right here, the pre-market open, right? We're on the 5 minute, by the way. right? It opens, it gaps up, hold, 732, 732, 732, 733, 733, opens, gaps up, right, and just keeps going. So the money accumulates. So probably like one player came in right here, another player came in pre-market, and then at the open another player came in, and then towards the end, maybe a midday player came in, and then the close another player came in, right? So I think there's multiple players that came in, and there's consensus there, and prices are moving in one direction. So yeah, I think things are very bullish on this one. I mean, collectively, $12 billion came in, probably from a handful of funds. I don't know, a handful of big funds is what I mean. Bernard says a Trump win favors the market, tax cuts for wealthy, lower corporate tax, huge spending, tax cuts, etc. Yeah, and on top of that, I talked about the updated budget deficit forecast that we have this year, right? We're forecasting 1.8 trillion in budget deficits with the few months that we have left. So it's just like I said, like politics is the I don't know, I historically I just don't pay attention to it. Like I just pay attention where the money's going. Like at the end of the day, you could you could pay attention to the Trump stool movement, bowel movements or whatever. Sure, like I don't know, whatever you want to analyze, right? But in the end, after you analyze whatever about him, right, or whatever he plans to do, whatever the market does, in the end, money has to be deployed to uh, uh, whatever, right? To express, there you go, to express what the market wants to do. So reverse engineer that, draw out the process. You kind of get a big picture feel of it. So if we draw it out right here, right? At the end of the day, you could have, insider information, whatever, number one over here. Or number two, you have advanced information, right? Advanced information, or you're on the inside. Or number three, you're in front of the deal or whatever. But in the end, whatever information that you have, right, it always goes down to the transaction, right? So at the end of the day, you have to make the economics, and it'll just reveal in the marketplace. To do that, it's like real time right there. So you could wait for Barron's to say, oh, this fund manager is accumulating these shares, or you could skip ahead the line and just look at where did the money go. That's what we're doing in here, right? That in itself is very advanced information already, right? Like this day right here, earnings gap up, hot big volume, $12 billion came into Netflix. Maybe 30 days later, the fund will reveal, file, what is it, 13F, 13G, or H, whatever, I forget the letter. They'll file it, and then they'll announce, like, there you go. Like, then now the markets know. But then 30 days later, this thing could be much higher. So you see the advantages of just like focusing on like just the price itself, see what's going on. This is the real time. This is the market right here, right? When people say, look at the market, right? Well, this is the market right here. When people say, look at the market, this is the market right here. This is the market right here. What right here, whatever you see right here is a representation of buyers and sellers, or bid and ask, right? They're going back and forth, bid and ask. It's the collective chart of it. That's what we're seeing. That's the market of Netflix. If you want to see the market overall, then we look at the S&P 500. The S&P 500 is the aggregate collection of the market representation of buyers and sellers. So if the S&P 500 is going up, then we know that, well, inflation is coming at the same time. Because these players, these equity players, right, whoever has the ability to push up the markets, right, even if it's collective players, collective institutions pushing up prices, it's basically saying that, well, collective prices going higher because they have nowhere else to put their money besides the S&P 500. So if they're going to cause prices to rise, then on their back end, right? You got to think about their back end. Let's go back to the S&P 500 here. Let's do a new one. If we think about it this way, this is how I think about it. If the S&P 500 is going higher, right? So let's do red. Let's say, wait, why did it go over there? Let's do this color. So let's say this is the S&P 500, right? S&P 500. And if the S&P 500, right, continues to go higher, right, the one question that I have is who? Who are the people participating in making prices go higher? Why, right? Why are bulls winning? Why are buyers winning? Why are buyers pushing prices up? That's one. So behind the scenes, if we reverse engineer it, we look behind the scenes, the back end over here. then we know what it is. It's institutions, right? Behind institutions, right? Where do they get their money from? Fundraising, FR. So they're fundraising a lot of money, right? They're raising, and from there, where's that fundraise come from, right? If we keep going, it's the balance sheets of whoever they're fundraising from. Are they fundraising from other funds, from other wealthy people, right? So you get it? They fundraise from other balance sheets. Basically, they give it to the institution. The institutions look for alpha, and if they don't see anywhere else, they put in the stock market. So the stock market goes higher. If the stock market goes higher, they essentially anticipate inflation because on their back end they're accumulating more capital. So that's the engineering, the financial engineering of or the flow, you could say. Does that kind of make sense, guys? We could draw one more time because that was a sloppy drawing. Let's draw it one more time. So let's put the S&P 500 far over here. So going back to it, let's say this is the S&P 500, right? S&P 500. And if the S&P 500 goes to all-time highs like this, right? The question that I'm asking is what players have bought it, and made it go higher, right? All these players right here. And those X's right there basically represent institutions, right? Because the vast majority of the game, the players in the game are institutions, right? At least I strongly believe so at this point. Institutions more so than us, average folks over here, right? And from the institutions, they get their money from fundraising, right? FR, fundraising a fund, right? And those funds come from the balance sheet of basically wealthy people, high net worth, right, to ultra high net worth. So high net worth balance sheets to basically, I would say top earners, right? Top earners like business owners, executives, just man, what other celebs or whatever, right? Right? And then all that they get their money from basically their market, right? Their consumers or their markets, B2B or B2C, right? So that's where the money comes from. So if we analyze, we trace the money, right? So from the another market right here, which goes to the top earners over here, to basically are the balance sheets of the top earners over here, and they'll get fundraised by these institutional folks over here, and then those institutions will basically pile it into something like the S&P 500. So it is very meaningful to analyze the direction of the S&P 500 because I firmly believe or think, in my opinion, it's indication of higher inflation. And the fact that the market's going higher, I won't be surprised, like I mentioned last week, to see $10 coffee soon enough. So yeah, that's what's going on. That's why it pays to analyze the markets more so than the opinions of people. Like it gets tiring. Like after like so many years of like analyzing the markets and the narratives, like you kind of see it grows old, and then you see like, oh, there's CNBC again trying to get people to be emotional. So it just gets tiring, and the conclusion that I've come to is just I'm just going to analyze price because that's where I notice like some of the heavy heavy traders that are trading like $100 million. This is all they pay attention to, right? But to get there, you want to build that foundation, right? Because it's a foundation of psychological confidence as well. So that's why we got to practice every Sunday, I believe. And even then, even when let's say you really get to a point where you feel like really comfortable with everything, you still even on your own you still have to analyze it like every week. You have to identify like the next trades and stuff like that. So essentially, I truly believe what we do here is just the practice of like the institution right here, right? Someone that's engaging in the markets, which requires analytical, hours of putting in analysis on the charts. Because again, there are 8.2 billion people in the world according to a chart, but we can't see that with our eyes, right? We can only see further with insights via analytics. That's why analytics has value to it, and that's what we do in here. We do a lot of analytics. So going back to the fangs real quick, right? So I noticed like this one's red right there, right? On the fangs. Let's individually pull them out. Let's see which fangs are not doing so good. So we pull up Meta right here. This is Meta. I mean, you had a long signal right here on the $8,000 indicator that we're looking at. Long signal, right? Where it's slowing down a bit, but we're still long technically. So Meta looks okay. Apple over here. Apple, did we get any long signal? Oh, we actually got a recent long signal. It's funny, I started buying Apple this week as well, right? On the call side before earnings. So I expect Apple to rally before earnings, but that's a play right there. But Apple had several several of these green dots right here, which is again long signals, according to the other grandmasters that exist on the planet. That's Apple. Let's look at Amazon. Amazon, I'm still looking at a key line. So Amazon's yellow right here, right? But I expect it to go above that 190. 190 is my key line right here. All right, I need to go higher for it to see positive progression. But Amazon's just yellow right there. Let's look at, I forgot to look at Microsoft. Let's look at Microsoft. All right, Microsoft, a little bit different right here. This one's like in the yellow right here, right? So questionable, right? But it's not trending up, but I don't think it's going to trend down because the Nasdaq looks like it's going to go higher. So I actually anticipate, potentially higher prices. So one could basically draw a trend line right there, right? So I expect this one to rally higher. That's Microsoft. Excuse me. Nvidia. Nvidia, right here. So this one, right? Still, I mean, basically long signal since over here, right? And still a long signal on Nvidia. So that still looks pretty good to me. I like Nvidia. Going into next week, earnings I believe coming up. I don't know, it's not showing here, but it should be coming up. Uh, what's the other one? Netflix, sure, we can look at Netflix. Not part of the look at the signal right here. Look at where the long signal is on Netflix, right? We got a long signal on Netflix. These pink lines right here shows me like basically a large player coming in, right? Uh, Sometimes it's not always accurate, but sometimes it's very meaningful, right? So the pink line shows me the sh like I don't know if you can see it right here. It says relative volume standard deviation, right? So it just shows like wow, like that's some big volume that just came in. So that's important as well. Yes, we'll look at AVGO. AVGO actually looks really good. I'm bullish on AVGO right now. What's the other one? Tesla. Let's look at Tesla. All right, so Tesla, okay, that's the one. That's the one that's slowing down everything. So we got like red on Tesla, right? But we got earnings coming up. So I think I don't know. I think Elon Musk is making a lot of noise right now. Like especially like if you look at the rocket related stocks, the rocket narrative is doing really well. So I think this one's probably going to gap up on earnings, but again, it's dangerous if you don't know what you're doing. But I think there's money there, right? I think there's intentions for this to go up, and earnings is coming up next week, so something to pay attention to. There could be a play here. This is actually nice because it might be just like Netflix. Netflix sold down before earnings, and then on earnings it gapped up to new highs, all-time highs. So I think that might be. I can't imagine like Tesla gapping down this earnings for some reason. Again, this might be a bias, right? So you gotta be careful. We gotta recognize our biases when we are actively expressing a opinion of direction. I want you guys to know that I am taking risk on a thought here, right? And don't take it to heart. Don't be like, oh, Kay says this, then is gonna do that because he said that. That's just wrong. It's we have to collectively think together on this, I feel. So what I'm thinking is again, based off like the rocket narratives, the robot narratives, him being in the news recently, yeah, it caused a gap down. It's sort of like a sell the, buy the rumor, sell the news. So the news is out, he's doing this and that, but earnings is coming up. So it's a different type of event-driven catalyst that's happening here. So what I'm thinking is that this one probably gaps up based off the rest of the markets. I mean, markets are strong, right? Overall market posture is strong. So I don't see why not, but again, there's still room for error to be wrong here. Google. Let's look at Google right here on the $8,000 indicator. Google's been slow, but it's sort of like, it's been teal and blue right here. So it's essentially suggesting like, a buildup of strength right there. Earnings coming up soon, so something to look at. Is that all the fangs I looked at? Let's see. I did Microsoft, Meta, Amazon, Apple, Google, Tesla, Nvidia. Yeah, I looked at it all already. So AVGO for Barath. He says, take a look at this one. So AVGO has been a long signal basically since right here. So around the price point of 163, 163, the system says to go long, and it says to remain long. And I would actually join it here as well. Based off of like my own system. Remember, I love leveraging other sophisticated players' systems as well, right? This is their quantitative system, but I also have my system as well, right? I developed my system over teaching over the years, and I want to follow my system too. So it's nice because now I think the more advanced concepts of this is like where we're taking into consideration of like many other expert systems out there to kind of gauge like this is one expert system. What happens when you have 10 expert systems and you merge them together? Can you create signal, right? But in the end, you have to make your own discretionary judgment on the analytics that you're analyzing. When to sell AVGO? I mean, the system says long. So if you're consulting the system says don't sell. The system says go long. That's what the system's saying. If you ask me for K's system, it's still a long. So I don't have a when to sell signal. I think it could go much higher. So that's sort of my take right here. John says, would you mind taking a look at Palo Alto? Yeah, Palo Alto Networks. I saw that one as well. It's basically recovered its 200-day moving average and moving into all-time highs. We'll pull it on both systems over here. We'll pull on the naked, the normal FinViz system that we classically have been operating on for like the last 10 years almost. Or I have. Palo Alto Networks, right? This is what it looks like right here. It's stiffing up right there. Looks like a horse right there. So it's basically sitting right at all-time highs right here, right? So this thing is actually going up with the market. So we zoom out. This is what it looks like, and then we pull it on the $8,000 system. We basically have long signals right here. These are valid long signals because I would have taken the same trades right here as well. So long signal here, it's still in a long signal. So Palo Alto Networks, that's essentially, well, you got your, uh, that's the answer right there. uh, Again, I know folks are for the folks listening without their eyes, right? They're still getting value out of this, which is kind of wild, but it is what it is. I encourage you folks to unlock the eyes by joining the club because that's just it's just going to help me the community efforts, right? And you guys know I bring some good value hopefully here. But yeah, this is fantastic right here. I'm confident on this one, so I would go long, right? Again, not investment advice. And what else, guys? Pop quiz. Remember, like if I think something's a long, you still have to watch your ass, right? I can't watch everyone, right? So what is your risk? This is the risk right here. So if I say, right, if I ever say like, hey, I'm long here, we want to analyze what's our risk. So if I'm long right here at this price point right here, 374.61, my risk is right here. Risk is 370. And you have to respect that risk. Because if you lose like little, right? Look, if you get in anticipation for like a 5 to 10% win, right? And you're risking 1%, think about how many chances you get, which is amazing, right? Follow religiously the risk management. So that's the risk right there. Below that, I'm not interested anymore. But right now I'm very interested. Right? And you could fine tune it with better precision actually. But I like it right here too. But you just got if you get it right here, you gotta wait. So yeah, I really like Palo Alto Networks. Let's look at the hack ETF. Let's look at the proxy of like security, right? What's going on in the hack or the cybersecurity world in general. So we'll pull up this ETF right here as soon as it loads. There you go. Look at that. Look at that one, John. Cybersecurity moving to all-time highs. So this is fantastic right here. We know. So what do we know about Palo Alto Networks? We know it's Gartner leader. It's probably the number one, number two top publicly traded cybersecurity company. So we know it has that reputation. We know CrowdStrike, you could say its competitor maybe, recently sold off hard, right? What else we know? We know that the segment hack ETF is going to all-time highs. We know the markets is going to all-time highs, right? There's so many reasons does your same risk rule apply if you're, this is what John's asking, does your same risk rule apply if you're already in Palo Alto Networks right before it jumped? Would you adjust your stop loss to take a profit of 170 just before the jump? Hold on, I'm trying to interpret what you're saying here. I mean, you always have to raise your stops, right? Just before the jump. So let me take a look. I think I know what you're talking about. Just before the jump. So let's see. If you're already in Palo Alto Networks right before it jumped, oh, like right here? Yeah. So the rule, I mean, the rule is, again, this is up to you, right? Because I'm just introducing you a system, a standard system. So you're saying right before the jump, it jumped right here, right? Right before the 340 jump. So yes, I adjusted up. I adjusted up because I don't want to give back, right? So I adjusted up right here. But sometimes it'll do a stupid move like this, which I hate. It'll do something like this and it goes back in. I hate that. Right? Like that's one of the most annoying moves ever. And do we have an example? Yeah, Netflix, right? Yeah, I know, right? It does that, and that's one of the downsides. But look, if you know that, look at this. Same thing right here. Look, I mean, in a way, okay, yeah, Netflix right here, right? It dips below, moving averages, even the 50 right here, and then it gaps back up, right? So then it invalidates what happens here, or it validated the 50 MA as a support area. But this is really, really annoying right here, right? But that's what the game's about. It's not it can't be easy, and so you have to have like there's a system for identifying, right? Like good plays, but then like sometimes you'll get these wicks or fake outs that kick you out of the system. So you need a response system. So you need to implement another system to think about, okay, in a scenario where it tricks me out, do I have a system of getting back in? So yeah, right. So you need a system of I guess you could say this is my entry system and then my exit system. But then you also need well, an emotional discipline system. But then you also need like a correction system, a corrective system, where if you fall into this correction or a pullback system, do you know when to get back in, right? So here's an example right here of Palo Alto Networks right here, right? You would have got out based off the 50 MA system, down, right? And you would have got out right here. You're down a little bit, but you would have got back in right here. See what I mean? So you have to respect the system, even though the system is like, I mean, it's a systemic approach, and I think I almost think like in everything in life, like success is a systemic approach. I was actually just talking about that this morning. Were you guys reading the things I was saying this morning? Basically, in all this right here. I was basically saying, what was I saying? Uh, I mean, if you look at the Telegram group, right? You have to follow a system, and it's going to be hard. It's going to be dry at times, but I really believe in that at this point, more so than anything, because when you follow a system of progression and you follow the system every day, day in, day out, as time progresses, you're going to benefit. So I think that's really important. V says, yeah, but we have to be happy with profit, which is the importance, and not get too greedy. Yeah, yeah, that's the thing too. So Palo Alto Networks I really like for this week as well. That might be a mega play, but earnings coming up. So wait, let me see. Actually, no, never mind. Earnings is not coming up. It hasn't. Well, they didn't announce it yet. At least on my radar over here, August 19th. Yeah, they didn't announce it yet, but the security segment is going up. So let's check on Okta, right? Uh, I don't know if Bernard is still in this position, but I know it's been boring or choppy or not the way, one would want it to move because we have our rules, right? The rules are if it's below 80, right? It's below 80 right here. This is the line right here. We have some of our rules right here, right? That big player came back. I don't know if you can see it. Large amounts of volume right here, right? Which basically shows right there. So these are risk management points right here. That's what I'm saying. Like the, okay, like I said, the lesson for me is right, right. It's just really, I don't. Is Morris in here? I don't know if Morris is in here, but what he talked about last time, right? The problem with these plays is the overhead supply right here, right? Because you have bag holders at every level right here, right? These are all bag holders right there. Bag holding, bag holding. So as this goes up, these bag holders on the left side want to get out. So it could take this one, what we saw with Netflix, it took Netflix 2 years to get back to all-time highs. 2 years, right? So when you play something like this, right, a falling knife that has fallen, that has rested, it takes 2 years, like it takes years for a falling knife to get picked back up again. And you have to anticipate that. Trust me, like it's wild. Um, it's just gonna take time, right? Like even this one right here, right? As much as I want PayPal to go up, I know this is a long-term position, right? But now it's like, yeah, like this thing is getting a lot of attention, even like Upstart and Affirm and stuff like that, right? The other fintech or financial well, this is like a more mature fintech. At this point, this is again, this they make more money from financial infrastructure. They're less consumer facing than we all think, okay? They make more money from institutions. Not the little players like us. But it takes years, right? And again, I mean, does it? I mean, we're gonna be called the Broken Record Club, because if I keep pulling up Netflix and talking about like, look at the years and time that it took for it to get back to, excuse me, all-time highs. But the time for it to go from all-time highs to the next high is going to be relatively quicker. So that's what I'm saying. It's the cheap person mentality, right? The cheap person, the cheap player mentality, which is fine. We all love to be. We're all cheap. I think we're all. That's just our natural human, right? The cheap player mentality will buy right here. But just remember, if you buy right there, it's going to take 2 years, right? 2 years versus like if you buy the expensive buy up mentality, right? You could probably get the same equivalent performance of what 200 to is that two, yeah 200 to 700, which is a $500 move. You could get a $500 move in 6 months right here. You could get the same equivalent move in 6 months by not being cheap. Isn't that wild? Isn't that crazy? It's just a human thing. Humans don't like to lose, right? Humans don't like to lose. So for some reason, right? It's psychological that humans don't like to lose. So for some reason that it's when things are priced higher, people want it more, right? Like if Louis Vuitton or Gucci bags were priced like, I don't know, like $50 bags, do you think like celebrities would, show off a $50 bag? It's psychological, right? And we see it in the charts over and over. So that's what I'm saying. I think Netflix in the next 6 months has a lot of upside, can go really high in the next 6 months. Versus like when it's down here, which is like Okta and PayPal. You gotta give it years there. Bernard says your education is so spot on. I hope people are as thankful as I am for your perspective. No, hey, you're welcome, Bernard. This is really truly, in my opinion, like legendary like information here. But I'm not gonna play the easy crowd, that wants the fast information. There's no easy button here. The easy button is like we just gotta work for it, right? So the lesson is, right? The lesson is if you want to buy Okta as low, that's fine. You're getting a steal, you're getting a discount. But if you get a discount, you have to pay time, right? Now, if you buy it up here, right, where it's at all-time highs, it's not a discount, but the trade-off is you get more appreciation faster. I've seen it over and over. And we did the analysis with Nvidia like the last 2 weeks or whatever. I would love to do the analysis again. Timing is everything. If you get a 100% gain in 2 years, you want. Yeah. I mean, look, you get 100% in 2 years, or you get it in 1 month or 6 months. Look at Nvidia, right? So Nvidia right here, right down during the down period to recovery, that took. This is okay. I'll change the color. This took right here. Let's do yellow, right? Yellow took. Was it? This is. I guess we should put some time on here. This is 1.5 years. 1.5 years, right? Yellow is 1.5 years. You see, do we have agreement that, oh, damn it. There you go. Do we agree that's 1.5 years, right? Now, what happened when it cleared the high, which is right here, in that case, right? Okay, let's just do that, right? Let's do this. There you go. Okay, so let me see. Okay, so this definitely shorter time period without a doubt right here. But let me copy this because Command C, Command V. Nope. Oh, that's right. What am I? Sorry, I'm like I was clicking the wrong button. So what happened here? Is that a year? About a year. And about a year, right? I would even argue less than a year because if you really measure it, like for me, I would measure it like right here, like right there, right? Because that was like the true all-time highs. Uh, but let's just say a year, sure. Okay, a year. And then what's the price range? This one went from, let's measure the range, right? It took, okay, from the bottom right here, $10 to $35, right? Is that right? $10 to about $35. So a $25 move, right? Okay, 1.5 years uh for $25 range, 25 range, right? That's the yellow. Make it even. No, no, I'm gonna change colors. Forget that. Over here, 1 year for what's the range right here? What's the range? This is about 40. Oh shoot, 100. Man, damn. All right, $100 range. So, what do you guys think? You see, man, this is legendary information right here. Look at that. You wanna play 1.5 years for a $25 range, or you're willing to pay up, right? But you get a bigger range sooner than later. And we could even we could even zoom in and do this one right here, right? Let me see. Yeah, we could even do this period right here. Let's do this period, right? Same thing. This is a yellow period, and let's just do right there, right? And that's like what? That's how many years is that? That's that's about 2 years. Holy moly! Yeah, it's like 2 years, right? Okay, let's do that. 2 years, and then this one. I mean, this one ran for a while, even like you say up to here. So, okay, so 2 years for a range of 3 to 6, so $3, right? And then cleared highs 7 to 33 in about lesser. Well, again, I mean, you could already say there's lesser time here, but you guys get the concept. Let's make this yellow, right? It pays to not be cheap, and I'm trying to get folks on the other side. See that? It was true in this cycle, and this is a different cycle, by the way. All right, this is a different cycle. It's probably true even if we go over here. Oh my gosh, let's go right here. Look at this. Look at this. This is even. Oh my gosh, this is even more true, right? Look. Oh my gosh, eight, 8 years. This is even crazier. Eight, 8 years. 8 years right here. 8 years. Go to the yellow. We should just call it a wrap. We're done for today. That's all you need to know right here. 8 years, right? Oh man, look at this. Oh shoot, wrong one, wrong one, wrong one. This is an amazing analysis. 8 years, and then 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months. 9 months. Okay, all right, hold on. Let me clone this. Clone. Oh, geez. And then put it right here. 9 months. I'm telling you, my mantras are it's killer mantras. Don't be cheap. Okay, so look, you want to be cheap, you could be holding it for years, but when you pay up, you could be holding it for months. It really is a mystery how it grew that fast. Well, okay, Bernard, is it a mystery? I just showed you 3 examples on one stock, yellow to blue, and the blue, it happened 3 times. 3 times. Is it really coincidence? It's something about us humans and how we click, right? We don't want to lose. It's fantastic. It's amazing that it happens over and over. Would I be surprised if we could pull it back here again? Oh, yet again. Yet again. It took how many years right here? 4 years. 4 years, and then look at the performance over here. Even this performance right here. Like from here to here, right? Can we do it again over here? Maybe. I don't know. But here's another yellow period. So yellow is being cheap, right? I should have made this green. Green is being, exquisite, expensive, right? So wow, this is such an amazing exercise, right? Like I think the one was like the 8 years right here, 8 years and 9 months. So when we zoom in, right here, this was a fantastic trade right here. Because again, I know the numbers are like $1 now, but back then because of like, stock split and stuff like that. So imagine like back then this probably would have been $100, right? It probably went from $1 to $300. That was back then, back in 2016, whatever, right? But look at that. So you're telling me you want to be cheap and wait 8 years, or you want to be, expensive, exquisite, or I don't know whatever the word is, and wait this long. Isn't that crazy? It's crazy, right? Man, I just look at this all day right here. Like, just tattoo this on ourselves. Dang, that's wild, right? Imagine like you just wait 8 years and then finally, really like, I mean, this to be clear, like, okay, to be honest, like this thing went on for like, 9 months. You've already outperformed, right? Like, but to be honest, like, oh my gosh, this is just nuts. Um, this analysis is just, man. We getting money hungry in here or what? Okay, so the question is, the lesson is, are you trying to be this one? Are you trying to be this one? Right? Happened in several periods right here. This one was 1.5 years, and then I was this one for next about 2 years or whatever, right? So yet again, so that's a great analysis. That's really really cool. Um, but it's tough. It's tough. It's tough. It's tough, but I don't know. It's fun. You gotta love this game. All right, let's go on to the next stock. Now that we did extra detailed analysis of like prior cycles, right? To go back, it almost seems like it's always gonna look too high. You know what I mean? Like that's like the signal to buy right there. When someone that's not like in the game and they say, oh, that's too high. That's actually the time to buy. What signs do you look for to determine that the stock has reached the top of its run? That's hard. That's hard. But it's hard, but I love it, right? Embrace the hard stuff, as I was saying. It's hard, but there are techniques to spotting, toppiness. Now that I have more perspective, I think I think the topping action I didn't have perspective until it's something that you won't develop perspective until years later. I realize because you kind of have to go through the cycle and learn the lesson the hard way, right? So the way you determine a top is several ways, and there's like micro to macro tops, if that makes sense, right? Like there's micro topping action, which is like maybe like intraday daily failures, but then there's like the macro failures. So I think the only way that one's a hard one, John, but I would say the standard def cross, which is the 50 and the 200-day moving average, is how you get the general direction. So in terms of like all encompassing direction that has the most eyes, I would say is the def cross moving averages, which is the 50-day and the 200-day. That is like the holy grail of like general direction. So no matter what, you always want to have the 50 and 200 day. Bernard says it really tells you the state of what is the largest growth area for investing. Just look at the 5 years for Ring 8. Yeah, exactly, right? Those stocks are just, you don't want to touch those stocks. Like I rather play Palantir right here. I rather not be cheap and pay up, right? Again, that's how it is. Like man, I could just apply this concept to everything in our lives. Like, believe it or not, if you pay up for VIP access, you immediately build strong networks, right? Yeah, it might cost you like $5,000 to $10,000 to get into like a secret club or whatever, but like think about it, you're playing with other people who could easily transact at that level. So the trick in like I getting really far is just to not be cheap in this life. When you're cheap, it just you're to me, I pocket you in the consumer category, and you'll go through life learning to remain cheap, I guess you could say. But the really wealthy people, like you think they care about being cheap, right? They care about other things. So if you could bring value to those folks, you go really far. And I mean that's essentially how I got my what's the word, upbringing or my start, right? With like how can I, from humble beginnings become an angel investor? That's like a big gigantic leap. but I did that because you bring value, right? You have to bring value, and it's about not being cheap. It's about giving other folks value that are, uh, like higher economic status. They're gonna want you on their team. So bring value to. I know it's crazy. Bring value to wealthy player. It's the same thing as the strong getting stronger, right? Like Nvidia or Palantir or whatever. It's the same concept of bringing value to the wealthy player. It's really that. Like there's no. It's just the dynamic of it, right? I like. Does it make sense for I don't know, like someone with $100 million to bring value to someone with I don't know, like $10 to their bank account and just burning away their time? They will never associate with that. It's just the economics are just too far apart. Now, if you have 10, now is there are reasons why someone with $10 to their name for $100 million or a billionaire to engage with them. Do you guys know why? There is a reason. Because that person that has $10 to their name has some sort of sophisticated value point that could create way more, like that could create hundreds of millions or billions in value. There is reason for engagement there, right? Like I'm pretty sure you could find Elon Musk by just solving the most sophisticated problem today in rocket science. If you do, I wouldn't be surprised if you're like 2 degrees away from him. But you know what's stopping folks from getting there? The developing the sophistication of rocket engineering. But if you actually solve that, then you basically that's the fastest access to the richest man on the planet, right? Solve the most sophisticated problem in rocket science, and you're not too far from his proximity. Man, I go all day talking about that stuff. It's so interesting. But the problem is most of us have this, psychological tendency to mean revert back to easy things, comfortable things where the crowd is at, right? Even as I noticed that, companies like Kellogg cereal, or oh my gosh, you guys are gonna hate me for this. Someone's drawing on my screen right here. It's one of you folks who put a line right here. Who is it? I can't click on that line, but I could definitely turn off the annotation tool. So, I mean, at this point, it's like I probably know who it is, but all right. Uh, I know that was an accident, but what was I gonna say? Okay, let me show you the truth, and you're gonna hate me for this, but I believe I'm gonna save your life. Hold on. Let me show you this, okay? This is disgusting, but Costco vitamin 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 C Costco. This is insane, okay? This is insanity in my opinion. Uh, okay, it's called uh, here we go. Here we go. Give me 1 second. All right, check this out. Right? You could thank me later. You could thank me later. So Costco, right? Has anyone? Sorry, maybe my annotation. Oh, it's all good. It's all good, Bernard. Not Bernard, Barack. uh, okay. You guys know this brand, right? I know this brand because I have family members who buy this brand. And check out the ingredients on some of them. It's not this one though. It's the vitamin C ingredients. Uh, hold on. Let me look for it. It's crazy, okay? Like vitamin C nature made ingredients. Let me look for it. I know I saw it on the website. Let me see. Ingredients. Hold on. Hold on. I guess it's not here. There's coloring in it, which is wild, right? I guess it's not here. But it's some crazy. I'm pretty sure it was this brand, but maybe it's not this vitamin. But you gotta be careful out there, right? Because it's just insane. I'm afraid to look. Bernard says. uh, wow, where is it? I saw it the other day and I was shocked because I don't want to go on Amazon. Let me see. syrup, whey, or water, natural flavors, color added. All right, where's the color? It says color added, but I'm trying to show you that the insanity of this. If you're taking, let's see, color that they're not saying what color. Soybean oil. Oh gosh. Uh, where they're supposed to reveal the color added. There's color. It says color added, right? This is really important. Look, colors added, right? Yellow beeswax. Oh my God, why are they not disclosing the color? Uh, color added. So the shocking truth is, right, is yellow 9. There you go, Bernard. Well, thank you, Bernard. Bernard says yellow 9. That's what I was trying to point out. That's a problem, right? Like, it's a problem because in red 40, there you go. Red 40, that's blue 1. Oh my gosh, Bernard's saying it all. I don't know if you guys can see the Zoom because you're on Zoom. Let me annotate what he's saying right here. So Bernard has his vitamin C, right? Look, this is me saving your life from a friend to a friend. A brand that's so popular at Costco, yet Bernard's saying he's reading his right now. It says yellow 9, red 40, blue 1. Those are all like really not good for you. Why does vitamin C have coloring in it? Right? And so when I go back to consensus now, it's like I don't want to follow the crowd because the crowd is everyone's buying this thinking it's good for you, but if you actually read the ingredients, there's this coloring in it. That's just wild. It's just insane. And this is like, a brand that my I see my parents taking, and they're taking it like in quantities because it's like they want to be healthy, but there's color added, right? So that's what I'm saying. I learn a lot from the stock market, which is and also engaging at scale to see like our flaws as human beings, which is like which is basically like GameStop, right? Which is sometimes we ourselves are truly our worst enemies because we create a what's the word? We create a narrative that is truly destructive to ourselves. So like GameStop is an example of a narrative that we created. Which what was the narrative? The narrative was like what? Take down Wall Street or take down these big hedge funds. And so in the end, few people make money, right? Okay, Bernard's sending pictures right here. I love to see this. So Bernard, yeah, Bernard's sharing this. This is great. This is fantastic stuff. Uh, See, Bernard's proving my point right here. This is why I wanted to show. So Bernard just took this picture right here. Soybean oil, not good, right? This actually makes you fat, right? What like it's like that's one. Then you got look at this yellow 6, red 40, blue 1. These are cancerous things. These are artificial colors. They're cancerous. So to save you to go beyond and just help you folks make money in here, I guess, or give you the knowledge base, the foundation to make money. The other part to live long and prosper, we need to pay attention to these ingredients. So read the ingredients. I learned a lot. Vitamins are unfortunately not under preview for FDA, V says, so the quality doesn't have to be there. I think there's some solicitation. Let me see. Someone's at my door real quick. Give me 1 second. Uh, uh, Oh, it's just, oh man, birds at my door. V says your parents are probably getting the benefit based on the placebo effect. I don't know what you call it. It's a crowd behavior. Bernard says, what is sad? Soybean is the #1 ingredient, not the vitamin C. Like, then you're essentially taking things that, are just making us slower and like it's wild to me that we take these vitamins in order to think about long life, right? But it's actually making us slower and then making someone else richer, which is like it's wild, right? And it's just it goes back to Celsius. We analyze the stock over here. So I hope you guys take this seriously and we all wake up to this because together like this is a movement that's actually happening right now. I actually spotted this trend like years ago, but like now it's like really waking up because like every cereal out there is poisoning kids. Every cereal has like colors, in it, which is freaking wild. My doctor told me I need more titanium dioxide and soy lecithin. I mean, I at this point my take is I I'm just gonna eat what is natural to okay if it what do they say if it has a mother eat what has a mother or came from the soil of the earth. So just eat, and the thing is like there's a difference between organic and non-organic, right? Organic is like it's not sprayed with like toxins or pesticides. So that's it's even more wild. So the discovery in this journey of learning, guys, as I keep progressing every week, is I learn how disgusting our food system is. And like someone actually did an experiment, right? They went to London or they went to Europe, and the McDonald's in Europe, the French fries, has like 4 ingredients. But McDonald's here in the USA, it has like 40 ingredients. Freaking wild, right? Like holy moly, like 40 ingredients in McDonald's fries compared to like 4 ingredients, just 4 ingredients in the UK. Well, we're learning a lot in here. All right. And French fry sales are down. I mean, we look at McDonald's, right? So McDonald's, it's wild. It's wild that again, like it's just like inflation, it's just like taxes. No one's really going to save us unless we wake up and figure it out for ourselves. McDonald's right here, I mean, 25 billion in sales, right? 25 billion dollars, or 25 billion reasons in dollars, in dollar value, to talk about, what is being what people are consuming. There's a lot of people impacted here. But McDonald's stock is looking good. I mean, it's trending. It's getting bought up above the 200-day moving average. Look at that 200-day moving average right there. Right there. Wow, you guys are really coming off with the comments over here. Let's see. Let me read. Bernard, find nutrition. This because I learned most doctors don't know crap about nutrition. That's interesting. Their supplier is having problems. V says, I have multiple family members who are doctors and their health is mediocre at best. So don't lead by, yeah. Yeah, we got to figure out like what's true nutrition here and like what's true value for our health, really. Uh, John says, I go to Ireland every year, and the food there is so fresh compared to North America. Everyone and their dog is a farmer there, so there's more supply than there is demand. Therefore, no need for a lot of the harmful additives, preservatives in food. Yeah, I mean, one could say the original civilization was, the original economies were in Europe, right? And then the USA, but something happened over here. It's definitely the capitalizer. I thought about it too, guys. Like, if we go into futures over here and we go into grains, there's canola, right? Which is canola oil or canola, the grain, the commodity right here. This is canola right here. And if you actually do your research, right, the largest player of supplier of oil, like vegetable oil, that's essentially making us all sick, is basically, like a top commodities futures trader, which I'm not surprised either, right? So it's this company right here. Right? It's like this is the company that I came in from a different angle. I always respected because I knew that the top traders on the planet, at least I think so, came from this company. And then it's no surprise because they're commodities traders, futures traders, and they do a lot of hedging and everything. And so to learn from some of the best people on the planet, I didn't know like it was from a company that produced, well, the most amount of like oil on the planet that is in all of our foods, right? So learning a lot. I learned a lot of things. It's very fascinating right here. V says just like K, do your research and be good to yourself to get the best ingredients and don't be cheap. Exactly. Exactly. That's like another tax right there. Which is like don't be cheap as a tax. See, look, okay, like there's the mantra again, right? Like the mantra is stop being cheap with your life, right? In food is like right there, like you see it firsthand. We saw it right here, right? Like if we're being cheap on, this is an example. Okay, I'm not to point out anyone here. Okay, this is an example of like us being cheap on analysis, right? Because we're buying based off of what Costco could get $1 off of, what Nature Made or whatever brand this is could get $1 off of us, and we're buying based off of our peers who are buying the same thing thinking that we're getting this, but we're also getting toxins like yellow 6, red 40, blue 1 on a regular basis. Wild, right? And that could be a function of being cheap with our analysis or our dollar or being cheap, being lazy is the same thing. So the answer is like don't be lazy, don't be cheap, don't be cheap, don't be do the work of information, right? Don't be less informed, be informed. It's always about do the hard work. So that's what I'm about in here, and that's what I'm going to promote because I think that's better for all of our lives. We learn something new every day, right? Like Janice was telling me, like she was like thankful that the what was it called The air fryers, right? They're cancerous because of like the cheap materials that they're using to scale the stuff, right? Like it's wild. And so if you switch to like stainless steel air fryer or glass air fryer, it's a lot better. Like if you notice like these trends, us humans, right? Especially on the consumer side. This is why I don't like consumer sales. Like these air fryers right here, like you want to go for like the all stainless steel over here, but if you go for like these right here, they're the producer they have to scale it up, and so some of the materials that they use have like a lot of toxins. So it's something to do research into. But the conclusion and the lesson for everyone here is that 99% of the time, I feel consumer trends are very hazardous to consumers, right? So don't trust the information of the crowd. It's actually really bad at times. Trust the information from the players that do their homework, right? So surround yourself with experts, not just like experts in every dimension of life. Experts of legal, experts of tax, experts of investing, inflation, macroeconomics, technology. Like I wouldn't say myself, but like folks that similar to ourselves, experts in health, experts in nutrition. Surround yourself with the experts, not the loud, rowdy, people marketing things that are detrimental to their health or not doing the informational homework. Um, SK says because we are heading to a world where food is going to be manufactured in factories rather than farms. Yeah, yeah, I know. Like Beyond Meat and stuff like that, right? But then like that thing's pretty pricey too. Um, uh, Lots of comments here. We are what we eat, so if we are a fast food person, you are screwed in so many ways, he says. V says, Bernard says, but look at the healthy meat alternative stocks. I know, right? BYND right here. It's just wild. It's wild. But I do believe in, there are some. You just always got to do your homework, really. This is Beyond Meat right here. We zoom out. I don't think this one's recovering, right? I mean, if it does, I'd be. Let me look at the sales. Yeah, sales are going down right here. That's good for humanity or for the population. Jan says yes, thanks to you. I haven't used my air fryer since. Yeah, I know. It's harder to not use the air fryer, right? I love the air fryer too, but then I realized like, oh, there's toxins and stuff. Um, Drink more red wine and chill more, Bernard says. Yeah, there's also that. You know, Make sure you get the right grapes that aren't sprayed with pesticides. V says good example is the food pyramid. It's garbage because it was designed by the producers to push carbs. Yeah, push grains. Wow, now that got me thinking a lot. All right, let's get back to stocks, folks. Let's get back to high quality information. I mean, all this is good information around because, look, if we focus on the food being better quality for ourselves, then that's already a great investment because I'm helping you folks, all of us, extend our once our one chance at life here, extending our lifeline or our lives to live longer so that we can see our investments pay out, but it's just the continuous work that has to be done. So let's do some work. We focus on high quality stocks so that that's why we have an advantage. Yeah, I mean, we make more money, we eat better, we surround ourselves with the people who are eating the right things. It is what it is. So let's start looking at some stocks right here, right? Uber sold down a little bit. We looked at Uber last week, but Uber is attempting to make new highs, something to pay attention to, right? But what do you do when it does something like this? Right? So this is what I'm talking about right here. Like yes, it went to all-time highs, but then you get a blip like this right here. You get a blip down. So key thing to watch now is if it finds supports right there, right? I definitely do think there should be support because again, I'm looking at the entire tailwinds of the entire markets, right? Uh, get into Uber when it finds support. Excuse me. Yeah, you could buy the support or you could buy the resistance, either or, right? But there should be prior support in this area right here where the line was automatically drawn. So I'd be watching to see if a player is holding Uber at 80. If Uber could peak up 80 this week, then that could be something to think about. But earnings coming up, and this thing is already pushing the new highs. It's suggestive, right, that things could go higher. I'm expecting things to go higher. Barra says, with interest rates going down, I want to check on W Cloud bag holder at 35. Bag holder at 35. All right, let's take a look at W Cloud because that W Cloud is the ETF proxy that represents. It's a proxy for software. So when I say proxy, it's like it's just something that represents everything else. Everything else in software. I like this one. I mean, this is looking fantastic. Starting to look fantastic because why? It moved up above the 200-day moving average, and then it started catching a bid around 33, 33, 33. So I expect this one to go higher. Um, the place to the sellout point, right? The stop out was like there were several areas to stop out. I don't know when you got in, but these would be the areas to get out right here, right? Because the 50 MA was no longer respected. That's usually a red flag of things turning around. And then you saw resistance right here at the 200-day moving average, right? So now we're back above that. So then now there's a buy signal. So I would be looking to get in W Cloud, or in this case, software stocks, right? So W Cloud, let's see what this expert system says. The expert system also says long, right? It's been saying long since basically right here at 31.9, right? This is a high quality club over here. I'm showing you guys a very expensive system and how to look at it. Um, Okay, so that's W Cloud right there. I mean, if you look at other things like Sky, I mean Sky, IGV, these software ETFs they're going to new highs. Bernard says there's a life lesson that relates to what you were talking about. If you start investing early, you'll be set to retire early with no financial problems. Now, invest in your health too, so that you don't have health problems, right? That's also something to consider. So we got to do that early. Bernard says take a 10% gain every year for 30 years. Then you look at people that can't afford to invest. That is why we are in a society with 60% of people with only 100K saved and wealthy people not having to worry about inflation. And the strong just keeps getting stronger, right? So you have to, in the beginning, if you start off from nothing like myself, I would say, we got to position, we have to invest so much in the beginning so that we just ride our like the fruit of the seeds of your investments, really. Like it's everything, your knowledge, the people, like it's everything from invest in the knowledge. I truly believe the knowledge, right? Because the knowledge shows you the direction. That's the knowledge. Invest the money because the money helps you later financially. Invest in your health. You might make all this money, but if you don't have your health, what's the point, right? Invest in the relationships because relationships also grow and compound, right? Invest in the right relationships. I went out there and networked with a lot of people and realized like, all right, maybe it's not smart to network with everybody. It's smart to network selectively with the finite amount of time that we have. Um, yeah, like it's just every dimension. It's always that. And I'm gonna keep promoting that until like the rest of my life, I guess, because I think that's the way to go. So we look at Sky over here. It's coming back to it's making recent highs. It's coming back to almost all-time highs right here. So things are starting to look good for software, at least from this angle. So Sky, it holds things like Oracle's in here. Yeah, Oracle's looking really good. Arista Networks is in here for the network. IBM, oh my gosh, IBM has been making like new highs, right? It's like a company that for the longest time, for so many years, that I was looking at IBM, I'm just like, this thing's just, it's just like, like not really doing much. But then now it's just like, on a tear. And it's also making quantum, right? Quantum computing has been waking up. So that might be good for us, right? Because we got a quantum investment that we're still waiting on. But look at this, like for many years, look at how many years this thing. Look at this. This is like 2016. Wow, like so many 8 years right there. 8 years of like for the longest time, right? Even my journey over here, like nothing, 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 nothing. Look at this. Okay, look at the move on this. The moment it got into this right here, look at this. It already went like quite a bit here, right? So it's suggestive that this could go a lot higher. It's suggestive. Doesn't mean it's always going to be right. But it's interesting, right? For like for like 8 years. Yeah, IonQ and Arcit, right? Arcit is the more direct one. Uh, the more direct one the one that we have exposure from a syndication perspective. This is great. I mean, I would love for Quantum to catch a narrative. You get it? Because like the way I analyzed it back then was like it doesn't seem like there's much quantum opportunities out there, but it is like a topic, right? So if this narrative could run, then we know the value. Again, the value follows the narrative more so than like the fundamentals. But the fundamentals will, in the long run, the value follows fundamentals, right? But in the near term, right? It's also narratives. It's narratives and fundamentals. So yeah, I want to see. I actually want to see this space heat up. That would be great. right? IonQ is actually one of the more serious ones in the public markets if you want to get early exposure to quantum, but it's going to take years and many cycles of narratives. So I'm not too excited on the charts right here, but it is a play right now. I'll tell you that, right? Uh, let's see. Did I read everything? Yep. Okay. Cool. Let's keep going. Lots of knowledge here. Lots of lessons. Let me look at my list over here. So there's Uber, Affirm. I mean, yeah, I think the one for next week. I mean, again, this should be like one of the biggest positions. It's probably this one right here, right? Because this one is basically at all-time highs, right? And it might collapse because it's still new, but it might not. So we might get a big run on this one, but earnings coming up, so that's the hard part. But I do have I've been having calls on these at like the 50-day moving average right here, so it's been cruising elegantly, still holding on. I don't know. I mean I have it till I forget like 2025 plus, so next year plus. I might just hold on, but I'm bullish on this one. Um, I mean again, it's not. This is just how the markets is, right? Like if you want like a pure, value play that's strong, like Arista Networks, yeah. But if you want to take a little bit higher level, risk where something's not profitable, but what you want to detect is balance sheet value. So we click on this right here, scroll the statements, and we go to the balance sheet, and we want to see if I'm clicking on balance sheet right here. If I go down, I know it's a little bit small, but I go to total equity, I want to see if the balance sheets are growing. And so far, the balance sheets are not growing, right? So what do we know then? This thing is gaining in value not because of balance sheet or sales. Well, sales are increasing or earnings. So it's not earning more and the balance sheet isn't growing, but the price is going up, right? So this requires a higher level of understanding as to why is this going up. So it requires like several derivatives of understanding of technology, which is one is like large language models to build a foundation model like ChatGPT or Anthropic or Meta 3.2 at this point, right? In order to build a large language model, it needs a training data set to train off of. So these large language models, they really rely on, advanced, I guess you could say, consumer text base like Reddit or internet text base to basically train themselves, right? So if we're going to have these floating intelligent entities like large language models in the future, well, it needs a data pool to train from, and so that's why I think this one's going up, right? So it's more generative AI related, right? It's more advanced related. At least I think it's one of the most advanced stocks, and recently IPO as well. So there are some narratives to it that I think, again, it's never 100%, but I think the markets are feeling it out, right? So the prices are in a good direction, right? It is hitting recent all-time highs after IPO. And the other characteristics that we need to add to this is that it's a fresh shelf stock, right? It's not like Broadcom or Nvidia or Google or the Fangs, the Magnificent Seven. Those are top shelf, right? Then there's bottom shelf, there's mid shelf, and then there's a fresh shelf. This is a fresh shelf stock, and this fresh shelf just went to all-time highs or recent all-time highs. And typically a fresh shelf that goes all-time highs can run phenomenally, as we saw with like GoPro before it collapsed, Robinhood before it collapsed, Beyond Meat before it collapsed, Snapchat I think before it collapsed, Facebook before it collapsed. You see what I mean? So I've these are see like these are only patterns that you could detect if you were around when GoPro went to. Let me see GoPro. Oh, it's still publicly traded. Like these are the only things that you would only know if you were putting in the schooling efforts, right? We've been in the school for many years. Look at that. I know it's kind of hard to see, but you see, I wasn't lying when I said fresh shelf right here when IPO. This is as far, look, I can't go back any further, right? This is the furthest back I could go. But back in like 2015, I remember this because I was on the way up. I was playing the calls on the way up, and I was like, I was just like drooling over here. But um, I remember it ran up all the way up to like, yeah, like $100, right? And it was just like, this doesn't make sense. That was like the biggest short ever, just like Beyond Meat, just like Snapchat, if I recall, just like Robinhood as well. So it's a fresh shelf, and I'm experienced enough. See, this is what you guys are benefiting from, and I hope to point out that experience data set that I'm querying from my memory over here, right? My proprietary mental database of experience, and sharing my experience with you guys. So this is the alpha, by the way. Is that I've seen this before. I've seen this episode before. A fresh shelf could really run, right? So let's pull up Robinhood and show you how a fresh shelf could really run. Because I remember this one popping as well, right? I mean, it's popping right now, but I remember the stories of when it IPO'd, right? Look at that. I know you can't see it. It's so hard to see, but you see that? See that fresh shelf pop right there? And this is by the month, right? I remember this. Look at that. It popped as low as 30 all the way here. So we got to measure that move. It rallied. Oh, jeez. Oh, oh, darn it. I can't. Eh, that's not. Okay, hold on. Hold on. There we go. There we go. It rallied like, oh, jeez. Okay, you know what? It's because the stuff is in the way. All right, let's just measure it. So it rallied from 35 all the way to 84. All right, that's an example right there. Facebook, I don't know if we have that data. Let's see. Let's see if Facebook back then, right? Again, that's why I'm playing these fresh shelves a little bit differently, because I'm trying to remember these. Okay, Facebook, I don't think it had it. It just this one was like pretty beefy already, so it sold down, but then later it came up. Might be like a Rubrik, which we'll pull up Rubrik. Snapchat. I think that one had a run. I'm pretty sure. It's been a while. Let's take a look. I love revisiting financial history, quantitative history. No, this one did not have a run, but later it did. Right, later it runs. Beyond Meat. Excuse me. Let's take a look at this one. So Beyond Meat. Yeah, this one had a run right here. Right out of the gate. Right out of the gate, this thing ran a lot from 44 to as high as damn 238. Yeah, I think I remember that. I was in the office. I actually remember this. This was like, and we were talking about this with Bernard as well. Uh, and we were basically calling it a big short around this time right here, around the sub 100. Or saying like this is going to be a big short ever. I remember that. I said around 100, 100, and then even this low right here, 160, and we said this was going to be a big short, right? And that definitely was a big short because it went from 100, even like 200. It was unsustainable down to $6. So I would entertain us to challenge ourselves to do the hard things and consider, you know, playing put options on the next big short we identify. I'm pretty sure there's a big short out there. It's just scary sometimes. But that was a big short play. So going back to Reddit, right? Reddit, I think it has less shares than the amount of monthly active users. So the fact is, most of its users, right? It has 165 million shares outstanding. But if we go and search Reddit MAU, so go to Reddit MAU, monthly active users, right? There are well, let's see. I just want to get a quick number here. What is Reddit's MAU? And I'm surprised the AI, a little over 1 billion monthly active users. Okay, 1 billion monthly active users. Check this out. Shares outstanding, 165. There are 1 billion people on this planet that use this tool, right? On a monthly basis. That's the estimate. And there is only 165 million shares. And remember what Reddit did to Wall Street with Wall Street bets to GameStop, right? That was just for one stock called GameStop. Reddit is the entire thing. You see what I mean? So the narrative that I think is building up here that could potentially be is we could have a mega pump, right? If we thought GameStop was big, I think Reddit could be an even bigger pump. It'd probably be illegal for Reddit to pump its stock on its own, network distribution. So I think it's just like waiting for its own consumers of the platform to pump it up, right? But if Reddit becomes a target, uh, yeah, that's what I've been saying, bro. It's also a Gen AI. There's so many reasons, right? That's why it doesn't do justice for you to immediately say, oh, it's not profitable, and oh, its balance sheet isn't growing as we analyze it. But there are external variables that tell a different story about this, which is it's a generative AI play, meaning ChatGPT, if you like ChatGPT, if you're using it every day, well, ChatGPT trains itself from data from Reddit. And it says that in the S1. Who are the big investors in Reddit? That's a good point. It might have updated by now. I would love to look at that. See, these are thoughtful questions, very thoughtful questions. I encourage you folks to ask because it shows me like you're really trying to learn. You're flexing your, the wrinkles in your brain, right? So let's take a look. I don't know if it shows yet, but these are the investors right here, right? Uh, so I think this could be again, I told this narrative before, right when it IPO'd. I said that this could be the largest pump, one of the largest pump of all times, right? So I think this could like I wouldn't be surprised if this ran up to like 300. Like not anytime soon, but you gotta just go shares on this one or like many years out for the leaps or a year out. But I think the narrative's going to build up once the younger generation realize like, oh, I've loved Reddit. I read Reddit on the toilet like all the time, right? And it's not just about them. Okay, reading it is one thing, but also when they write, right? The fact that they read, there's data there. It's rich in data. Again, it's a data gravity play, right? There's only so few data gravities in the world, like Netflix, Uber, Reddit, and then the hyperscalers like Amazon, Microsoft, Google. Those are data gravities, right? Tesla, robotics, data gravity, I guess you could say, right? And then and then all the compute players, right? There's the hardware compute player. I mean, there's data everywhere. Um, Carvana has been a major runner too. Yeah, it has been. It has been. Lots and lots of good stocks. Man, I'm just like this is like one of the best games in the world. I'm truly happy this investment club exists. It could be a lot bigger. I believe it's going to be a lot bigger. I mean, I don't want it to be too big. It's just like enough is enough. But like, I want it to be like a lot more high quality people that you guys kind of know like what I'm about, which is nice. Like, it's like this is like what we're all passionate about. It takes time to draw out the people who are really passionate about this stuff. So I love talking about this stuff because like you guys know how rich like the dimensions of this, right? So let's analyze. Let's actually talk about these dimensions right here, right? So when we dissect the stock, right? Let's do this. Let's do a little bit of a brain, something new over here where you probably haven't seen before. So this is Reddit, right? And sometimes, right, some folks over here will analyze it from one angle, which one angle might be the financials, right? Where you might say like, oh, the income statement is not really there, the balance sheet's not really there, so I don't really like that. That's okay. We're not really looking at the financial side, right? So this is the financial fundamentals, right? But there's another side to this entity that we're looking at, which is like, there's a different story when you say the technology side. On the technology side, you have the Gen AI side, right? And the data gravity, right? That's specific to this business. That doesn't exist with any other ones. So this is the technology side, right? Then there's another side that I'm talking about, which I need to figure out how to draw this one in. Another side is like the sentiment side, right? Or another side would be like the corporate fundamental side, which is like there's only 165 million shares and there's 1 billion monthly active users, right? So that's saying something. So this is the financial side. This is the technology side. There's a sentiment side. So sentiment side. So use examples like Wall Street Bets, GME, right? What did it do to GME? So that's another side to it. And then there's, one could also say like it's also a source of where crypto knowledge or Gen Z, millennials. So that's Gen Y. So we'll put Gen, JY or GY, right? So I think, before you judge a stock purely on its fundamentals, I get it. But remember, it's the irrationality of the other players that drives the value of a stock. And I see a lot of irrational and also rational reasons from technology, sentiment, corporate fundamentals, amount of shares outstanding, to a generation that is, stuck on the toilet for an hour reading Reddit. I know because I have friends who do that. Right? So when it becomes when you're willing to give away your data by reading and writing on the toilet for an hour, right? You're willing to spend 1 billion monthly active users on there. That's a young crowd. right? It's fresh shelf. There's so many reasons to this. I see more reasons for this to potentially rally out of lack of fundamental reasons for a fact, but I think these are, more significant reasons to take a position. And I won't, again, it's like if it makes money, it makes sense at this point. Um, Bernard says, absolutely from Carbon Black, so many more. Very thankful for your insight. Man, Carbon Black, yeah, I mean, VMware acquired that one. That one and Pivotal. Later, I realized like Carbon or Pivotal was like the OG of enterprise software. I actually didn't, again, I wasn't like, fully enterprise guy at the time. So I didn't know Pivotal was like one of the OGs of like software, enterprise software. That kind of reveals like, how old I am, I guess. But yeah. Uh, Lots of stuff. Okay, lots of comments here. So Ivan says Upstart looks like Carvana. Yep, Carvana is heavily shorted before it started running. Yeah, we want to look at a short as well. There's so many reasons for a stock to run, but I gave you the reasons right here, right? So how many reasons? So reasons to own the stock, we got one, two, three, four reasons, right? And then one reason, that maybe it's like not the best, but that's okay, right? Because alone these four reasons drove GameStop up with Wall Street Bets, so I'm okay with that, right? So I understand the potential of this because I've seen the crowd behavior before, and I won't be surprised to see the crowd behavior again. So what other mechanisms can cause this stock to run? Well, if crypto runs, where do you think these guys will go to talk about it? They're going to go on Reddit to talk about crypto stocks or crypto coins. So more reasons to engage on the platform, for more reasons for the platform to collect more data, to become more of a data gravity for these large language models, in which later I could prompt or maybe build like, I don't know, agentic systems out of it, right? Perform RAG or whatever, like build a bunch of agents out of that and just talk to the agents and say, hey, like, make me a crypto startup based off of like whatever you learn, right? So it's man, it's fascinating times for, indeed, too fascinating. Let's see. V says I try and focus on the most volatile, but have solid future trajectory. Yeah, volatility is good. Remember that. Volatility is not bad. Volatility is good, especially on the upside. Especially, I mean, when a stock is really rallying, believe it or not, it's high volatility. Uh, I think my mic is like, you guys can still hear me, right? Just double checking. Like, did my mic change? Maybe a little bit of a sound difference on my end, but I think it's okay. Bernard says absolutely. Okay, read that. V says appreciate the credit for asking a good question, but it comes from your teaching and sharing. I was obvious to these type of questions prior to joining your investment club. We may have to call you Captain Kirk and train to be like Spock to capitalize on opportunities. Okay, thank you. No, I'm just here to train, guys. Like there is value in training, I believe, and maybe it took me years to realize that, but you could go in and ask ChatGPT or Meta AI, whatever, and just ask like, what is the result of doing analytical work for hours a day for 10 years, and you will see the results of it. So there is value in spending the time here, but it's up to you on how you want to spend your time on this planet that we all have, right? Of course, folks will spend it with their employers, and folks will spend it with their family. But then in your me time, right? What is your me time? You might spend it at the gym. You might spend it at, in your investing portfolio for your future. In which case, if you're doing investing, it requires you to do analytical work like this right here, which we're doing analytical work. Um, there is no substitute for analytical work, right? Because unless you know someone that's always doing analytical work, you could follow them and then just keep banking off of their calls. But that's always like, the derivative of your source or your source of wealth because you're always banking on someone else's analytical work, which could be a model too. That's essentially like a RAG, a retrieval augmented generation model, if you think about it. Because now, you're like, oh, K is the LLM, right? K is doing all the work to become the LLM, the foundation model. I will just be a agentic, or a RAG application on top of K. I mean, that's a move too, I guess. But you know what? You know what? Like, if anyone knows what I'm talking about, here, let's actually draw it out. So right now in the world of tech, right, everybody's like really hot on generative AI, and the pattern of generative AI is almost like the same pattern that we see with like all things life, right? So it all starts off with a chip, right? You guys already know a chip, and then the chip you feed it into a data center, right? And then now you have a data center, and then later, right, you essentially have the hyperscalers that have to virtualize all this. So the hyperscalers or the AWS, the Amazon, the GCPs, and then from here they ended up creating these I don't know, these foundation models called LLMs, right? And then now the trend is to build basically these agents around these LLMs, which is LLMs are basically floating intelligence. So it's actually very fascinating, all the way back from more demand for these chips to more demand from these hyperscalers to these data centers to these chips, right? More limiting factor in AI is power, energy, renewable energy, right? So what's hot over here is renewable energy, RE over here. So that's why I'm not surprised to see that. What's that one energy company that's located off of 237? It's like I think it's probably it's like Green Energy or something. Ah, I always see it. It's just like a logo, right? So I'm not surprised to see like sophisticated real estate emerge in Silicon Valley, like the data centers and the data centers are the most sophisticated real estate on the planet, without doubt, right? Like if you know about data center real estate, then you know what's up, in my opinion, because that's the foundation of all this, right? Like I just showed you the path of the chips to the data centers to the virtualization with the hyperscalers, right? The virtual machines, which is all this right here, and then the large language models, and then the agents that are coming online right now. All of this requires a lot of data. Data is actually all across right here. Like data would be, data is all across right here, right? And then this is where the model is. This is where the data is at. This is where the hardware is, right? So wherever you want to play in the stack, which is very interesting. And then NVIDIA's right here, right? NVIDIA's right here. Data center. I mean, you could also say NVIDIA, but it's a collection of like, NVIDIA, Pure Storage, NetApp, all those hardware. And in the cloud, you got the three, the big three, right? AWS, Azure, GCP. And then you have the data platforms like Palantir, PLTR, and then you have the large language models with like Anthropic, Meta. Oh yeah, Meta's over here. Yeah, that's actually what's happening in the world right now. Fascinating, right? Most folks don't actually know that. They don't know what's going on right now. It's kind of lonely. I think some people know what I'm talking about in here, like some of you engineering folks in here, but for a lot of folks, it's confusing, but that's okay. Um, what's that green logo? I gotta go drive by there just to clear this curiosity itch. Anyways, let's keep going through stocks here now that we have some perspective. Uh, Arista Network. Let's follow up on some of the things that we talked about. Unless you guys have stocks you want me to look at, always feel free to chime in and just say, hey, look at this stock. I'll look at any stock for you guys. Um, we'll look at this one real quick, right? Because sometimes like this is a good one, and sometimes it pulls back, right? And so you need to decide what to do, right? One way to look at it is that it's still holding the 20-day moving average, right? Earnings is coming up, but we know this is fundamentally sound. So any pullback, I expect this one to get stronger as the strong gets stronger and the market's getting stronger. Other ones, let's keep going. I actually have this one right here, CART. I'm looking at CTVA, Corteva. If you have a moment, would be nice to hear what you think. I would love to look at that. So CART is doing pretty good. It's moving up elegantly here. Looks like, again, this is also a fresh shelf one right here. I forgot to mention Rubrik. So fresh shelf about to be at all-time highs. Something to think about. Let's look at Rubrik real quick, and then I'll look at Corteva for you. Rubrik right here. This one also cleared a range. So look at that. It cleared a range. This was the trading range right here, right? It was stuck in this trading range for months, but now it's setting a direction right here. So Rubrik, right, might be something to watch. Just saying. Let's look at Corteva. CT. I want to see what you guys are looking at because I know what I'm looking at. I want to see what you guys are looking at. Let's see if the instructions are hitting. But oh yeah. I love it. All right. Okay. So agricultural inputs. So all the pesticides and stuff that they're essentially selling, right? That we're eating, right? The stuff that if you opt out from organic, then you will be inorganic, right? So protecting, preserving the source of our food. It's funny how they market themselves, but I'm pretty sure what they sell is it's like pesticides and stuff. Crop protection right here, right? Seeds. Look at this. So products and look at crop protection. Let's see. Herbicides, fungicides, insecticides. seed treatment. So yeah, this is what makes food non-organic right here, right? So to produce food at scale and to get the bugs away, they'll spray like pesticides and stuff like that. But it looks like this stock wants to go higher, right? So massive volume accumulation up here. Yeah. I mean, especially this year. Like this year alone, in terms of 2024, like something changed. I don't know what news happened here, but we got a gap up right here, and it's been accumulating all this time. So this thing looks like it's trying to go higher. It's kind of sad that it's agricultural inputs. They're doing about 17 billion in sales. Shares outstanding is going down, right? This almost looks like a classic, billionaire or big institutional fund that's just accumulating this because they know that humans have us consumers have no choice but to consume inorganic food. They sell seed mainly. Okay. So Ivan knows even better. I could dive into their investor section and learn a little bit more. Sounds like they sell seeds, which is going to be important too. Let's see. Let's see. So this stock events and presentation. Let's take a look. Let's dissect. This is before we go any deeper, right? This is Ivan's territory because he's if I recall, PhD in agriculture. So he knows this way better than I do. So I'm coming in as the amateur here, just full disclosure and contextual awareness, setting up, right? Setting up the situation where I'll consult him on what they do. But I do want to take a look in here crop sector market outlook. So maybe we could look at some global macro demands and stuff like that. So what are they saying? Growing global demand for agricultural commodities. Without a doubt. I mean, our food is just man, like even what I do is what I would do if I was like really wealthy. I'd buy a farm. I'd buy a farm and hire people to do was it regenerative farming or whatever, right? Where it's like, let the animals poop on the soil, let the soil be healthy, right? Rotate it. Just give me my daily eggs and milk and cheese and all that. Yeah, that's what I would do, right? Strong supply despite isolated disruption. Annual productivity is key to farmers' financial health. What else? What else? I mean, fundamentally, these are older companies, so fundamentally they should be good. But seed momentum continues. CP remains challenge. Okay. Let's look at global net sales. I'm just going to run through some of the EBITDA over here. Guidance. What's it thinking? Company has been around since the 1800s. Dang. Yeah. So I mean, so when a company has been around that long, right? Let's actually address this as I go through this real quick. Okay, cool. I think I got most of it. So when a company's been around that long, like, do you think like it makes sense to do fundamental analysis? Like, like heavy? No. I don't think it makes sense to do heavy fundamental analysis because every analyst on earth that's hired by Wall Street has probably done it already. So that's why I would feel like it's not like a fresh shelf like a Reddit, right? Now you kind of see like there's different stocks with different like like age to them. So Corteva, right? From a technical analysis, it looks great, right? 41 billion market cap. Income wise, is taking home 900 million. Sales wise, 16 billion. So sales is pretty consistent too. And as John says, is over 200 years old as a company. 22,500 in human capital. Optional, yes. Short, yes. Debt-wise, man, for 200 years, it's like been profitable for well 200 years. This has like the best like credit profile ever, I bet you, right? And then the shares outstanding is declining. There's some beautiful factors about this. It might not be a growth play, but an inflation play, right? So there's no like hyper growth because their sales quarter over quarter, they're only like growing like 1%, right? But their profitability, EPS quarter over quarter, they're becoming more profitable. So it's becoming a cash and eventually high dividend turnout. So we look at the dividend right here, go down to where Barack was drawing right here. Dividend wise, it's like, estimate like 1%. Okay. So we want to go to the balance sheet and see if the balance sheet is accumulating value because that's probably where it's hiding value. And so if we go to the balance sheet, this is the income statement. We'll click on the balance sheet right there. We go down to the balance sheet and total equity. Okay, balance sheet has not been growing. So that's interesting, right? It's just been sideways, right? So maybe we could investigate, right? Because the markets right now are telling me that someone's buying up since the beginning of this year. Someone knows something, which is like inflation or has a view on macro. I don't know what it is, but I mean, I would, I mean, there's enough evidence for me to want to go long here. But what I would tell you, John, is that this one's going to be a slower one. right? It might not be as fast as like an Nvidia, but I am pretty confident it's going to go up, but more in a slower manner. That's all. I'm confident it's going to go up, but slow. That's all. Because there are nice factors about this that I really like as I'm looking at the snapshot right here. And it's just so fundamental to just like life on this earth, right? With 8.2 billion people. I honestly think like now that I'm more like objective based, I do believe, and I think Ivan just hopped off, but if he came back on, I would have got his perspective on like the future of agriculture. Like I don't know, I maybe I might be negative on this, but we are getting pretty populated on this planet Earth, and so it's almost like buying real estate now, gobbling it all up. It's what I saw like basically what Roofroll did. Um, it's just like now I think about like the other countries and how like everybody's gobbling up space and food and it's the future is bright in terms of like technology, but we also have problems that I could see maybe not now, we might not feel it now, but in the years to come, right? Because I mean, what would you do in an overpopulated world, right? Where food is, you have like elastic watermelon that's like, or elastic avocados. It's not the best nutrition. So I think down the road, we really need to invest in food and water, and I could see it. I could see. I mean, those are solid investments in my opinion, but it's just going to take time, right? So Cortiva, I like. I actually do want to do a deeper analysis and look into the ownership, John, if you don't mind. So let's go into Cortiva and let's take a look. Uh, let's see. Let's take a look over here, and we go to let's do the ownership, right? I didn't check the margins on this one. As a business, the margin wise is 5% profit margin. So yeah, they're taking home money. Shares outstanding declining over the years, which I really think, from what I'm seeing, I really think some long-term player is buying this one. That's what my hunch is from what I could see. So this is like old, traditional money that is really trying to own this stock. And as I'm looking at the ownership, 11% of the company is owned by Vanguard. Not surprised. These guys just basically, like I said, like they got so much money, they fundraise, they buy the shares, and re then they hire their human capital financial advisors to go sell people who aren't invested mutual funds where they slap a fee on. Think about that, right? So let me just show you like it's wild. This is the definition of like processed investments. Processed food, like processed food, you want to eat the source. This is processed investments. So what they do is like you got the stock market right here, right? Let's say you got Apple. You got Apple, AAPL. And so what they do is they go and they fundraise. They fundraise, and it could go either direction. They fundraise and they have a pool of money, right, from the fundraise. From that pool of money, they then create these contracts called mutual fund contracts. Then they sell it back. They sell it back with like, I don't know, a percentage, right, to the person that is not invested, right? Over here, this portion right here, they fundraise from ultra high net worth, right? From here, they engineer. This is the process part. This is the engineering part right here. This is the engineering, and then they sell it to the uninvested. And so the more they fundraise, the more they basically pump up the value of the markets, which is just wild. It is just wild. That's why it's key that we analyze companies like Apple, and if it goes higher, because we know folks like these guys are here, right? The big players, um, they're the drivers of the market because they will go and process it and redistribute a different contract that's collective and they make it sexy. They make something which is like the original stock not sexy, right? And they sell a derivative of it because people are financially illiterate, and that's the fee that they're capturing. you later on when you work with a financial advisor, they sell you all these mutual funds and stuff. Like I'm talking about like a mediocre financial advisor. They sell you all these mutual funds and stuff. It's just basically process investments. But it's just wild to think about that business model and how crazy it is. Um, but yeah. Anyways, folks, we got 4 minutes left. Hopefully, today I opened up a lot of eyes. I think the most exciting one for me was like this one right here a little bit because man, this is just I highly recommend changing the brand, Bernard, and sourcing like a genuine brand. I don't have a brand for you. Um, man, I even question question the one that I take, the vitamins I take. But as far as I know, the ingredients on mine is pretty good. But I recommend, this is eye-opening, right? Drink OJ instead. No, hold on. Like, drink organic OJ from organic oranges that you squeeze because the processing, all right, everything's process information, processed food. It's just like process investments, right? So the OJ, what they do is they will have, let's say you have your farm, right, and all your OJ right here, right, all the OJ, and what they do is they'll spray pesticides from Corteva, right? Corteva comes in and they spray all this, right, with pesticides if it's not organic. And then from there, they'll basically collect all the oranges, right? All the oranges with the pesticides on it, right? And then they basically squeeze it into a bucket, right? So let's say this is the OJ, right? This is the OJ that you're going to drink that's been surrounded by pesticides from because it's not organic, and then from there, they're going to dehydrate it, right? So in other words, they're going to turn it into a powder, right? So you got OJ powder. So the reason why they dehydrate it into OJ powder, right? OJ dust, OJ dust, right? So that it's lighter weight, so that they could ship it to a different area, and where they ship it, right? What they do is they rehydrate. So they take the powder and they rehydrate it, right? They put the water back in the lifeless dehydrated stuff, and that's how you get concentrate. That's from concentrate, and then from there you have your concentrated OJ. That is from again, if you buy cheap ones, is from non-organic pesticide dust to rehydrate it, and that's your OJ. Have a great weekend. uh, uh, yeah, yeah, it's wild, right? It's wild when you kind of understand the root, you know. Again, in here we talk a lot about the root of things and still say drink red wine. Yeah. Uh, double check all your ingredients. That's the best thing to do. But guys, some comments here. Let's see. Eat a lot of dark green, leafy greens, vegetables with the highest nutrients per calorie. SK says, K, Netflix killed Blockbuster, but can it kill AMC and cinema halls too? That would suck. I love going to the movies. Or Netflix may end up buying one of these cinema hall chains. Thoughts? Which way it may pivot in the future? Man, that's a hard one. The best data to collect is like on Netflix, but it might be like a Whole Foods play where eventually Amazon had all the data and they wanted to make another move by collecting the grocery data, I'm guessing, and grocery distribution getting closer to consumer. So yeah, there is a play on the infrastructure that AMC has laid out in terms of like physical theaters, but I think the technology and use case hasn't emerged yet to make it really lucrative to capitalize on that. But in terms of like the players who have the capital to buy that, yeah, probably be like the data gravities, the emerging data gravities like Netflix, right? Eventually, but until that move happens, it's not a reality until it happens, right? So yeah, there's a possibility, but the question would be like, like why? I guess like if Netflix wants to debut really good movies and make it physical, but then like you're limiting your digital distribution by raising your costs, but you're acquiring physical infrastructure, right? So I think right now with us humans, like with the way technology is moving, I think we have a problem with determining what to do really with these physical infrastructures called real estate of all dimensions, right? Like, yeah, like food makes sense because the input to foods, which is like the commodities, the agriculture is going up. Um, but yeah, movies would be more entertainment, right? I don't think we have gotten that far yet. I think we're just playing the base layer right now. So acquire the base layer infrastructure of human staples, right? So it's more like the Costco infrastructure, the grocery store infrastructure. Then eventually entertainment will be next. That's the logical step in my mind. It's what I'm thinking. So I think that's kind of far. That thesis is kind of far, I would say, SK. But SK says buy AMC, convert cinema halls to AR, VR plays. Then maybe Facebook. Only a very profitable player could do that. It'd be Facebook. Cloud gaming halls, yeah. So if we introduce like a new caliber of experiences like AR, VR, and make it fun to go to these, large rooms again, yeah, I mean, like it's like AR, VR, laser tag. I'd go. I'd spend my money on like some good exercises to shoot down my nephews with some lasers. That sounds like a lot of family fun right there, right? Like dynamic laser tag with AR, VR. That and you incentivize people with an actual social profile off of like Facebook and give them points and levels and equipment, right? Selling digital things. I could see that happening if we get to that level of entertainment. That could definitely be next, right? Where let's say my Facebook profile or whatever Instagram profile, it's all the same at this point. WhatsApp profile, it's all the same. It's all Meta. Let's say you add economic incentives to it, where if I go to this mall that has a theater that's been transformed to like a laser tag or some sort of like gamified economics with digital assets, it'll motivate me to go there, spend time there, play the game, level up, collect digital assets that I could bring back and maybe convert to crypto. Yeah, like that's like I'd probably hit that up weekly instead of the gym, and I'd be really fit with cardio because I'm playing laser tag and earning cryptocurrency. So there are blends that can potentially happen, SK. And it is infrastructure that someone else took the hard work of building and collecting. So I don't know, but it's just consumer entertainment's like a little bit further away. I could see the potential, but very far. Um, you're welcome, V. You're welcome. Gold has been performing. How long will this run continue? I think gold will continue to perform. I see it. I mean, depending on what you're looking at, that's a play too. But I think at this point, I like Bitcoin a lot better than gold, just because if you want fast money versus slow money, but both of them are making money, right? So yeah, so gold miners, those are performing. All right, folks, it's 12 o'clock. I will have the weekly report out to you folks later today, as usual. But I definitely enjoyed today's discussion. All right, as always, like we're learning new things, and I'm sure everyone could benefit from such knowledge. But time for me to go, get my nutrition. uh, Thank you. Janice says, "Thank you, Kay. Love learning about wealth and health. Wealth and health. That should be our new mantra. Wealth and health, guys. Wealth and health." All right, guys. I'll catch you guys next week. SK says, thanks, Kay, for another good session. Enjoy your day. Enjoy your day, too. Enjoy your day, everyone. Looking forward to seeing you all again next week and see what we learn. So thanks for coming today. You're welcome, John. Welcome, welcome. I'm going to power off now. Have a good night. Have a good night, everyone.